Section 24. Prorations, taxes, HOA fees, and prepaids. The small numbers that create big questions. Why am I paying the seller's taxes? Carlos thought he had finally conquered the closing disclosure. Then he found the tax adjustments. He stares at the numbers and calls Sarah. Why am I paying the seller's property taxes? Sarah pulls up the transaction documents. Before we assume that's what happened, let's look at how the taxes were allocated. This is where closing statements can become confusing. Not every amount shown as a credit or debit represents a new fee. Some amounts are there because the transaction needs to divide expenses between the buyer and seller. Proration is about allocation. Imagine a property-related expense covers a period during which both the seller and buyer will own the property at different times. Someone needs to determine which party is responsible for which portion. That's the basic idea behind a proration. The settlement professional uses the transaction information, contractual terms, applicable billing periods, and closing date to calculate the appropriate allocation. Sarah should understand that concept. She doesn't need to become Maria's calculator. Arizona property taxes create questions. Property taxes are a perfect example. Arizona property taxes can create closing adjustments because the timing of tax bills and the transaction may not line up neatly. Depending on the facts, one party may receive a credit while the other receives a corresponding debit, so that responsibility is allocated according to the settlement calculation and contract. Carlos looks at the closing disclosure and says, "But the tax bill hasn't even been paid yet." Exactly. That may be why an adjustment is needed. The settlement process may need to account for taxes attributable to the seller's ownership period, even when the actual tax payment occurs later. Sarah can explain the concept. Maria should explain the exact dollar calculation. A tax adjustment is not the same as an escrow account. Here's another easy place for buyers to get confused. Carlos sees a property tax adjustment in one part of the transaction. Then he sees additional money being collected for taxes in the initial escrow payment at closing. Are they charging us twice? Not necessarily. These amounts can serve different purposes. A transaction proration allocates responsibility between buyer and seller. A mortgage escrow account involves funds the lender or servicer may collect and hold toward future expenses such as property taxes and homeowner's insurance. Same expense category, different reason for the money. This is exactly why buyers need explanations instead of assumptions. Then comes homeowner's insurance. Emily sees homeowner's insurance listed as a prepaid item. But we're not even moved in yet. Remember, certain mortgage-related expenses may need to be paid in advance. Homeowner's insurance is commonly one of them. The lender wants to know that the property securing the mortgage has appropriate insurance coverage beginning when required. Emily may therefore see an insurance premium among the prepaid items and additional amounts collected for the mortgage escrow account. Sarah can explain why insurance is connected to the transaction generally. The lender and insurance professional should explain the specific coverage and collection requirements. What is prepaid interest? Then Carlos asks about prepaid interest. This one catches a lot of first-time buyers. Interest may begin accruing based on the loan's applicable terms before the first regular monthly mortgage payment becomes due. That can create prepaid interest collected at closing. The exact amount can depend on the loan and consummation timing. Sarah shouldn't calculate it on her phone and tell Carlos the lender is off by 11.42. Jason should explain the loan calculation. Sarah should understand enough to know why the charge may exist. Now add an HOA. Emily and Carlos's Gilbert property is located in a planned community. That adds another layer. There may be HOA assessments, transfer-related charges, disclosure fees, outstanding balances, or other amounts that need to be addressed, depending on the transaction and applicable law and contract. Suppose the seller has an unpaid HOA assessment. That's not something Sarah wants everyone discovering after the transaction is supposed to close. Arizona law can provide an association with lien rights for certain unpaid assessments. Title and escrow professionals therefore need accurate association information. The surprise special assessment. Now imagine the HOA approved a special assessment shortly before closing. Emily says, who pays that, us or the seller? Good question. Don't guess. The answer may depend on the contract language, timing of the assessment, governing documents, and other facts. Sarah should review the applicable purchase contract provisions and coordinate with her broker, title escrow professional, HOA, or legal counsel when necessary. A good agent doesn't answer every question from memory. A good agent knows when the answer depends on documents. The closing date changes everything. Remember when Jason's financing delay almost pushed closing 3 days? Suppose the parties actually change the closing date. Could that affect prorations? Of course. If an expense is being allocated according to ownership periods or transaction timing, changing the closing date may change the calculation. This is another reason Maria needs the final executed amendment. A 3-day closing extension may seem small, but the settlement figures may need to be updated. It's only $200 is the wrong attitude. Here's where many agents get into trouble. Emily says, "I think this HOA charge is wrong." Sarah looks at it. It's $225. Sarah says, "Don't worry about it. You're buying a $490,000 house." That's a terrible answer. The size of the transaction doesn't determine whether a charge deserves an explanation. Clients remember money. If Emily is being charged something she doesn't owe, $225 matters. If the charge is correct, she deserves to understand why. What would you do? Imagine you're representing the seller. The closing disclosure shows your seller paying an HOA fee that the seller insists was already paid directly to the association. What do? You don't tell the seller, "Just pay it again and sort it out later." You obtain documentation and contact the appropriate escrow or title professional. Maybe the association's ledger hasn't been updated. Maybe the charge is different from what the seller thinks. Maybe the disclosure needs correction. Investigate before making conclusions. Broker tip: understand the category, refer the calculation. When clients ask about a closing figure, start by identifying what kind of number you're looking at. Is it a contractual credit, a proration, a prepaid expense, an initial escrow deposit, an HOA-related charge, a lender fee? Once you understand the category, get the appropriate professional involved in explaining or correcting the specific calculation. That approach keeps Sarah helpful without pretending to be the lender, accountant, title officer, or escrow officer. Emily and Carlos now understand the smaller adjustments on their closing disclosure. But there's one section that gets the attention of agents immediately: real estate commissions and compensation. Who is being paid? Where is it disclosed? What happens if the amount is wrong? And can an agent ever accept money directly from someone in the transaction? That's where we're going next. Carlos sees both a property tax adjustment and money collected for taxes in his mortgage escrow account. Why doesn't that automatically mean he is being charged twice? Answer: the amounts may serve different purposes. A tax proration or adjustment can allocate responsibility for property taxes between buyer and seller based on the transaction, while an initial mortgage escrow deposit may collect funds that will be held for future property tax payments. The settlement professional and lender should explain the specific calculations. 2. The parties extend closing by 5 days. Why should Sarah make sure escrow receives the executed amendment? Answer: changing the closing date can affect settlement calculations such as prorations, prepaid interest, and other date-sensitive amounts. Escrow and the lender need accurate transaction information so the final figures can be updated. Sarah should promptly provide the executed amendment rather than assuming a few additional days will have no financial effect. 3. Emily believes a $225 HOA charge is incorrect. Should Sarah dismiss the concern because the amount is small compared with the purchase price? Answer: no. Sarah should take the concern seriously and determine what the charge represents. She can review relevant transaction documents and obtain clarification from the escrow, title, or HOA professional as appropriate. Even relatively small incorrect charges can create client complaints and may indicate that settlement information needs correction.